In the equity quadrant, taking a look at the September S&P futures contract, the ES, the mini, had a reversal, a full reversal from down 2% on the lows. 36.9325 was the low today. That was down 1.98% from the 37.6725 settlement that we had yesterday, up to the highs of 38.0550. So back above 38, up 1% on the highs, but we fell back below there and we ended up finishing the day up about 0.25%, maybe a little bit less than that as we got into the full settlement process. We're now up 3 of the last 5 sessions, but people might find it interesting that that bear market territory marker, that down 20% from an all-time high, we've still closed under that level. We're still down about 21% from that recent all-time high. Now, that's not to say that closing above it would pull us out of a bear market technically, but it's interesting to note that even though we've been up 3 of the last 5 sessions, we're still well below 20% from that all-time high. Now, Jerome Powell's testimony today came in with no surprises for the market. It was as expected. It really seemed like early this morning, because of the volume levels, there was a little bit of nervousness about Jerome Powell's testimony, along with speeches from Charles Evans from the Chicago Fed, Patrick Harker from the Philly Fed, Thomas Barkin from the Richmond Fed, and none of that was really any surprise to the market. As a matter of fact, Jerome Powell was pretty consistent about inflation being the top priority, not trying to drive the economy into a recession. He certainly said he doesn't feel that the economy needs to go into recession to control inflation, but that one was possible. So no surprises for the market. We get a rally from the S&P 500. Also, yields dropped today on the treasuries, the U.S. treasuries. They actually fell most in over a week. The biggest fall we had was from Tuesday to Wednesday last week. But today we had a 2-year drop about 15 basis points, 5-year about 15, 10-year about 15, and 30-year also 15 basis points. 10 years back down to about 316, 30-year back down to about 324. Since it was across the curve, the yield curve really wasn't affected.